This is Dan Dix here reporting for Press for Truth, and 2019 is starting out to look incredibly shaky for investors. In fact, the global markets are down. The Apple just had a big crash. The stock market in general is down. The Canadian housing market is down. Gold is down. The crypto markets are down. Basically, we're on the brink of a financial crisis here moving into 2019, and we're seeing all the telltale signs that we've seen in the lead up to the 2008 crash. So this is incredibly telling about what 2019 may look like. And joining us on the line to help us break this down is our good friend, author, and economic analyst, John Sneisen of World Alternative Media. John, thanks for joining us. I want to get your views on the bank returns in 2018 and how that's painting a picture for a very bleak look at 2019. But before we get into that, let me get your views on this article that just came out from Zero Hedge today. It says the stock market crash of 2018 is rapidly transforming into the financial crisis of 2019. Stock markets are crashing all over the world. We are seeing extremely violent flash crashes in the Forex marketplace. Economic conditions are slowing down all over the globe, and fear is causing many investors to become extremely trigger happy. The stock market crash of 2018 wiped out approximately $12 trillion in global stock market wealth, but things were supposed to calm down once we got into 2019, but that clearly is not happening. So, John, this is not looking good moving forward for 2019. So can you break it down for us? What do you make of this? What is it? Where is this leading us in 2019?
Well, I think I'm going to quote Trump and say, I think it's just a glitch. No, no, it's definitely not. Like what we're seeing is a very much looking like 2008 crisis, where you saw massive ups and down swings. You have some of the record ups and downs in percentage-wise in 2008, and now as well, you're seeing a small part of the biggest ups and downs are actually starting to populate the top falls and gains right now in the history of different stock markets in the United States. So you're seeing a big problem there, Dan, already, and it's just starting to really smell a lot like a financial crisis, because it's not so much about the bad sales that Apple had, or about the trade deals with China. It has all to do, in my point of view, debt. That's the number one word for 2009 that's going to come back and haunt us, because all the way from 2008 to 2018, we pumped trillions upon trillions upon trillions of debt into the markets worldwide to try to manipulate the economy up in the housing markets. They're really starting to struggle severely on a lot of different countries: Australia, Canada, Norway, Sweden. You got London. There's so many different places where you struggle with that, and that's of course debt. Then you have mass amounts of student loan debt. You have mass amounts of auto loan debt. You have mass amounts of credit card debt. You have mass amounts of housing debt, and the private debt to GDP has been rising. So a lot of countries, their total debt to GDP, if you account for both government and private sector, you're looking at 300 to 320, 330% to GDP. So 3 to 3.3 points times more debt than the actual total GDP. So what you're seeing, though, is like at first it was a little bit helpful for companies to use debt to be able to do economic activity. But at one point there was a switch, because it was getting too much debt. And now suddenly you got to the point where they're actually using debt to financialize the whole economy. And you're just using debt to make money with money. And you're not using debt to build something or innovate or create or expand or do something like that. You're just financially engineering in order to prop this massive bubble that we've been blowing with all this debt around the world, Dan.
Well, this notion of a global debt crisis brings about a question for a lot of people, millennials who probably don't understand economics. And that question is, who is this debt owed to? If it's a global debt crisis, a lot of people are wondering, okay, who do we owe the money to?
Oh, who we owe the money to is all the banksters around. Like it's mostly the commercial banks that print over 95% of our money that exists today has been created through loans in these commercial banks like JP Morgan, like RBC here in Canada. All the major banks are just printing mass amounts of money. And what you're seeing, what is telltale with the crises of this, and what's showing that the problem with that we have a huge debt problem is actually the bank stocks and the returns in 2008, which is very reminiscent of 2008, like pre-2008, what happened with bank returns. Like bank returns was severely dropped down on the bank shares. And of course, it's no different today. And the worst banks around the world, and this will surprise probably most people, because Germany comes as the big and solid country like a United States. They actually have the worst banks in the world, the worst performing banks in the world. Both Deutsche Bank and Commerzbank have lost 54 and 56, 57% of their share price. Now, from the peak of 2008, Deutsche Bank has lost 93 or 94% of their share price. So they are severely down there. They're getting hurt. They are Deutsche Bank, for example, is the fourth most globally significantly important bank rated by the Financial Stability Board, which is a kind of a watchdog for all financial institutions, being insurance, banking, or accounting, whatever it is. And they have been saying that Deutsche Bank is the fourth most important bank in the world. Well, when we had in 2008, we had $13 billion that was a problem. And that was through Lehman Brothers. Well, now we have a way, way bigger problem with Deutsche Bank, with the derivatives book of, somewhere around 30 to $40 trillion worth of just derivatives. And then, of course, the bank has just shrinked, as me and Josh have reported on just lately, to a $15 billion bank. And where does that come from? Being, having derivatives exposure at one point was as big as the world GDP, with about $75 trillion in derivative exposure. So it's just massive. And it's not just the German banks that are suffering. Danske Bank, for example, which was caught money laundering in Estonia through their branches there. They are the third worst bank. That I looked at the major banks. Then you have Credit Suisse is one of the worst ones. Alpha Bank in Greece. You have both Italian, Greek banks, and also Canadian banks are not doing that well. They're actually on the top end of things, interestingly enough. But we could get back to that in a little bit. I'll talk a little bit about what's happening here in Canada. But when all come to all, Dan, we have a severe problem with banks. And it's not just, the banks that are struggling. We have a fundamental problem with debt, as I said, and that shows in all the major stock markets around the world. Now, I looked at the G20, and I have a chart here that I could send you so you could show the viewers. This chart, Dan, shows actually the G20 countries and their major stock markets. So I have a little bit more than 20 stock markets, but all of them except for 4 are in the red. And out of those 4, you had 3 of them having major inflation. So that accounts for a lot of the positive look on their exchange. So you're seeing, you're looking at, for example, here in Canada, we are down as of yesterday. So I know it fluctuates highly now. It's up like 2% or 1% again, but it was down 13.29% on an average. And for example, China is the worst. They pumped, a debt bubble from about 1 trillion in 2001 up to about 40 trillion in debt in 2018. And that growth is just massive beyond anything this world has ever seen, because they're trying to catch up to the US empire of debt. And they had to try to create their own debt system. But the problem is now they're struggling. You've seen the stock markets are down 27 and 28% down, and that's in what you call technically bear territory. If you're past 20%, and Germany is as well, that's when you technically, are entering into what could be a severe recession or depression. I believe we've been in a depression, not a technical one, but we've been in a depression since 2008 because we had to print all this mass amounts of money to even just prop up the economy. But that's only my opinion. Of course, that doesn't mean I'm not no PhD Keynesian economist like Paul Krugman, But I believe that might be a big problem, unfortunately.
Well, I think when we see a lot of these massive swings in the stock market, we have to remember that wealth doesn't just disappear. What's happening is it's transferring hands. It's moving from some hands to other hands, and there's a lot of theft involved here. There's a lot of shady dealings behind closed doors. So what do we do about this? Because I know the people of Iceland actually took it to the extreme of jailing the bankers. Is it likely that we could actually see something like that happen here?
I don't know if we're gonna see it. I really hope that we're gonna see it. I think that the banks, like we're probably gonna see mass amounts of bank fail, and I'm not sure even if bail-ins is the way to go, because that's been blown up as the solution, or what they call here in Canada recapitalization of the banks, where they take a part of your money to bail out the bank basically, and save their bad bets that they made with stocks, derivatives, bonds, whatever it was. Um, the problem was even in Iceland, where they jailed bankers. Well, they replaced those bankers with new bankers in those same banks, and the debt levels hasn't gone down that much. The debt level is still quite severe, actually. So it hasn't changed very much in Iceland, as much as people would love to have seen, of course, because you still have those same corrupt institutions, unfortunately, like Glitnir and Landisbanki, those big banks in Iceland that went bust. You still see the remnants of the same problems, because yeah, you can replace the people that were sitting in those institutions, but when you have a corrupt institution and a Ponzi scheme like a bank really is, with the fractional reserve lending that it does, you can't really change a bank. Unfortunately, you can only maybe limit or stop it for a little bit, but then after a while, those bankers that maybe have good intentions, who knows, are starting to get corrupted by the system the banking system is in itself, unfortunately.
Mm-hmm.
And you were talking about a wealth transfer, Dan, and I actually shared a chart at our WAM Facebook page just recently that I made up of the historical gold, because we were talking about wealth transfer, and when wealth transfers, when fiat currency, the current banking system fails, well, you're going to need to protect yourself somehow and find some assets that are able to actually give you that kind of protection. And, well, surprisingly enough, it's gold that historically, and silver that historically, has been able to be there as an insurance. You have a life insurance. If you die, you give some money to your wife so she will take it well care of, or opposite. But you have wealth insurance to protect your money your hard-earned money that you saved up for yourself, to be able to take care of yourself when you get older, when you can't really work that much anymore. And Canada, for example, we used to have over 1,000 tons of gold, but that started selling off, and the sell-off started really in 1965, when we were at the peak of 1,023 tons, and then it rapidly sold off until the 70s, when it plateaued, and then in the mid 80s, it sold down again from about 600 all the way down to 96, and then of course the last remnants was sold in 2015, when they sold the last 1.7 tons. And of course, me and Josh, we had a question for Bill Morneau, the current finance minister, about that. And he said, well, gold doesn't have any value to us. And of course, right after he sold all the gold and saying that, he ended up in Bilderberg, which you are quite familiar with, Dan. So it's no surprise that the same corrupt institutions that we build, the infrastructure, it's not necessarily too many people that are corrupt in their true beings, but they're corrupted by the system that we built, the infrastructure of money.
Well, on that note, I mean, we all know that Trump has somewhat taken the credit for the healthy stock market in the lead up to the end of 2017. Moving into 2019, if he can take the credit for its positive side, is he going to take the fall for the crash? And is that all part of the design? Because I've thought for quite some time now that the dollar crash is inevitable. and perhaps Trump is being positioned to take the fall as being the cause for such a thing because he's a businessman. What are your thoughts on the idea of Donald Trump being blamed for a dollar crash, whether or not he caused it or not, but he may be the scapegoat for it?
Of course, he's going to be blamed for it when it happens, and I can't see like at least the market crash. It might get a little bit more of a longevity to the actual dollar collapse in itself. But the market crash, it's definitely gaining momentum now with massive volatility, lots of ups and downs. And also there was just a jobs report that came out, which was touted out the mainstream media as like, yeah, we gained about 377,000 jobs in the United States, where we thought that we are going to have 170 something. So that was a massive gain. But then you take a closer look at those numbers, and the people that are actually gaining, it's actually a lot of government employees that have gotten more jobs, and that's more taxpayer money going out of your pocket. And then the biggest amount of people lost their jobs in the construction industry since 2007, which was the peak of when they got rid of most people in the construction industry. There's a chart on Zero Hedge in the article showing this, and it's interesting. It's right around the same number as they laid off right at the peak of the collapse in the real estate market in the United States. Mm-hmm. So you're seeing a lot of these, great talks about the United States being very strong. It's has two sides to it. The ISM, which is the Institute for Supply Management in the United States. Their numbers of economic activity fell the greatest since the Lehman Brothers collapse in 2008. This is an article from MarketWatch. Then we have another one, which is Lord & Taylor flagships. Fifth Avenue shuts down its stores after 104 years. A lot of people will blame, it's all because of Amazon, but it has a lot to do with the economy in itself, because people have racked up so much credit card debt that they don't have any more debt to spend into the economy, and all this consumption economy is falling apart. And then lately, another big warning comes out of Japan, of all places, because what is happening in Japan is that their currency is very cheap to borrow, with the Bank of Japan having negative 0.1 interest rates. Well, they can borrow money very cheaply to everybody else, so basically close at zero. So what traders do, they go and borrow they borrow the yen, and then they pay back in other they go and invest in other currencies with higher returns, and then they pay back the yen. The problem now is you had a massive flash crash in the yen. You had 10%. It fell just overnight. It was I think it was on January the 2nd. It was a massive flash crash. And then, of course, the yen is severely down. And what that does, it's actually not down. It's actually getting stronger to the US dollar. What that does is now the debt in the yen gets really expensive. So now the margin, like the lenders that are doing this carry trade, as it's called, they are, their debt is getting a lot more expensive than they accounted for. And now you're seeing as kind of an unraveling in the Japanese stock market, so people trying to get money to pay off all of that debt. So there's a lot of things happening around the world. We're so interconnected today, but this also happened before 2008, this yen, fallout. But we're so connected today, Dan, that like things that are happening in the U.S., or if it's happening in Australia or Canada or in Japan, all of that will affect all the banks in the world, because I did just a recent report on all the debt in the world. And I found massive interconnectedness of all these banks are borrowed to each other. So there's no bank. It's a kind of a ring firing squad where all of them are pointing a gun at each other. And they're kind of like one will die no matter what, and all of them can die because they'll just continue to shoot each other. They created like a web of debt that has created this interdependency on everything. And now if Deutsche Bank goes, that's the fourth most important bank in the world. It's actually the most important bank in all of Europe and Asia for derivatives trading. When that goes, Dan, there's nowhere really to hide for people other than tried and true things. And I
Mhm.
know we'll get back to that in a couple of seconds, but that's what it all comes down to, Dan.
Well, can we essentially look at this then as being kind of like a healthy correction? Because look at it in the case of Apple stock. It went down 452 billion since October 3rd. Now, some would say that it was, improperly inflated before then, and now it's just kind of leveled out at where it ought to be. Are some of these flash crashes necessary for the market today?
These flash crashes, Dan, they're of course 100% healthy corrections. But the reason why we have what's called flash crashes, which is crashes that happens within nanoseconds, the reason we have these crashes is because of high frequency trading platform, and that's computers that are trained to and have algorithms running on them that are looking for certain patterns to do trades. And that's why you're seeing these massive crashes and flash crashes. This, started in 2010, was one of the biggest flash crashes in history, where the Dow just dropped in seconds and came right back up, I think like something like 800, 900 points. And it's all driven by computers. Most of the trading today that we're seeing is not so much the mom and pop investors anymore. It's algorithmic trading platforms that are probably trading on for the mom and pops that are invested in different funds. But there's not any real people, not very little real people left in a lot of the major exchanges today.
Well, okay, so moving forward, let's think about solutions now, because I mean, we know about the importance for self-sustainability. We know we need to grow our own food. We know we can get into gold and crypto and things of that nature, but what would you say moving forward in 2019 are the best ways to store your wealth?
Some of the best ways to store your wealth in 2019, and this is of course my opinion, but I'm looking at historical what the history is telling me, and I would say things that are real that people need. It comes first, like food, water, having a house over your head, having maybe something to protect yourself with. For example, that be guns or whatever else you might need. That comes first for any human being, and it might be different from locality to locality. So don't just quote me on saying that one commodity is better than to hold on the other, because it all depends on the region that you're in and the locale, what is most important to the local population. And you can hold your wealth in some certain points of that, predicting that something will happen, and you'll position yourself to not only survive, but also thrive through crises, because you can help other people get what they need when the whole infrastructure is starting to fall down. For example, the grocery stores, stops transporting anything because the transportation companies have gone bankrupt, and all this stuff that turns into when it's a highly leveraged financial collapse. And then second, you go and look at, okay, so I have all of my regular, food and everything that I need to survive taken care of. Well, if you have extra money after that, take a look at other things to protect your wealth with. And of course, debank yourself, be out of the banking system, because as you see, the banks are getting really hard hit now in the economy because of all these debt problems. So you might see asset freezes coming out. You might see bail-ins or even bank collapses happening, where you're not going to be able to get your money ever, or there might be a limit set on what you can take out of your bank account, like what happened in Cyprus and Greece and a couple other places in Europe during the last crisis. So it's very important to be outside that system, and that's where gold and silver comes in as a great wealth protector. But then you can save whatever wealth you have, but you could also, if you have more, you could maybe gain a little bit of the advantage of having more than, the experts say 5 to 10%, but you could have a little bit more. I have way more than 5 to 10%. Because I know what's coming, but that's what the experts say. So gold and silver is very important, and then cryptocurrencies are I think it's going to be very useful during the next crises, because you can actually trade them in between each other. And they're outside of the banking system. They are not controlled by any banks, Dan. And I think that's going to be a really, really great way of getting around the problems that we've seen in 2008 with, people lost mass amounts of money and they couldn't get their money out. Instead, if you had it in other assets that are liquid, as you can call it, where you're easily at hand, you could actually get a hold of them very quickly and then transfer them around to whatever you need to do during some kind of a crisis. So it's important, first of all, take care of your health and survival. That's the number one. Then you can take care of your health, which is number two, and then get out of the banking system, which is both the wealth part. You can add on to that with some more gold and silver, or you can keep some crypto on hand in order to be able to trade with people when the system starts to really struggle, because we're seeing that today's banking system, I believe, is on the verge of a complete reset. And we can't get away from it. That's the thing. There's no way out of this reset that's happening. No matter if it takes like just 1 or 5 more years, but the longer it gets pushed out and held back, Dan, we're going to suffer even more greatly at the other side of that. So I would say, get prepared. And if you haven't prepared yet, for crying out loud, really start to educate yourself. Read books. You can pick up some of my books, The End of Freedom, How Our Monetary System Enslaves Us, to understand the economical history and monetary history, to understand why you need to protect yourself. Then you can look at, what's happening in I wrote a book on for our Canadian audience called Canada, the Greatest Economy in the World, ? Because it was a big question mark, because built on debt. And I also have great solutions in that book as well on what people could do to protect their wealth and make sure that, why do we have to suffer so greatly because of these elites are, looting us and stealing our own money and not caring about us. They just care about themselves and continuing to keep the system afloat. Why can't we, as people that are understanding what's happening, survive and thrive for ourselves and then, educate people and create a greater position for ourselves and hopefully a lot of solutions on the other side of this collapse than what the elite has. Because if we have better solutions, I think we're going to win that.
Well, I would agree, John. One of the best things we can do is remove ourselves entirely from the banking system, one step at a time. If you are in debt, you get out of debt. Get rid of those credit cards. Get rid of that line of credit. Get rid of that mortgage. And we often say this: you may have to reduce your standards of living and live in something smaller, but you'll own it outright, and you won't be indebted to the banks. That's absolutely key moving forward. So, John, once again, I want to thank you for helping to break this down for us. We will have links in the description to your books and where people can subscribe to you guys at World Alternative Media. So, John Sneisen, thank you once again for joining us here today.
Thank you, Dan.
We all want truth. The truth will set you free.